I'm Adam West, industry news editor for badcredit.org. I'm here today with Patrick Gerhart, president of Telcoin Digital Asset Bank. Thank you for joining us, Patrick.
Hey, thank you for having me on here. It's great to be here.
So, I want to talk about a few things. Like the main focus of this conversation is we've been noticing a big trend of fintechs, crypto companies applying for digital banking charters, and the timing of it's interesting. But we can dive into some of these details about what it means for companies to actually have these types of charters. Since I know that you were the first one in the U.S. that's actually recognized as having one of these. First, I just want to start with getting you to tell us a little bit about Telcoin itself and what your team is offering through this digital asset bank.
Yeah, more than happy to. So Telcoin was originally started back in 2017. It created its own token called Tel and its own decentralized wallet, the Telcoin wallet, and operated that for a few years on its own. And then our founder, CEO Paul Nooner, decided to kind of take things more internally within the US. And he was interested in what kind of was going on with Wyoming with their first ability to grant crypto charters. And then during that process, he reached out and was talking to his former Notre Dame college roommate, then state senator and now current Nebraska Congressman Mike Flood. And Mike Flood was basically like, why go to Wyoming? Let me see if I can set something up here. So they started the process back in 2021, and it still blows me away. They passed this in the first get-go of the Nebraska state legislature. Any state legislature is huge. But they passed the Nebraska Financial Innovation Act at that point, allowing digital asset depositories to operate in the state of Nebraska. More importantly, as I like to come from, because my background is traditional banking, it is regulated by the Nebraska Department of Banking and Finance, which is huge, and we can get to later on here. But that's kind of how we got to where we're at right now. Basic, crypto company who is interested in getting more integrated within the U.S. financial industry, and we viewed going through the banking industry as the best way to do that.
I think that was a great overview. I think the only thing you didn't really touch on that I was interested in is like what types of services that you're offering through the charter.
Yeah, no, definitely. So the charter grants us a lot of the same products that a traditional bank would use. But right now we are issuing our stablecoin called EUSD on the blockchain that we have developed here through Telcoin Digital Asset Bank. So that's kind of our first product going forward, but we are looking into other things because the Nebraska Financial Innovation Act does allow us to get into lending, CDs, other things of that nature like a traditional bank would do, just on a crypto level, specifically with stable coins. So right now, that's kind of what we're doing. We're trying to get our EUSD out there on the marketplace for other people to utilize.
But there are plans to eventually get into lending. That's definitely like a big audience for our site is lenders and people who work in credit scoring.
Yep. Eventually going down that route and everything. Because like that all plays heavily into it. Yeah, you mentioned credit scoring. That's trying to figure out the intricacies of kind of how that works and how those loans and everything are going to be set up. We're still in the process of kind of figuring everything out, but it is in our business plan to kind of move forward with that at a certain point in the future.
So as I mentioned before, Telcoin Digital Asset Bank was the first true blockchain bank in the U.S. It was the first one that was recognized for this. So why did your team decide to pursue this charter, and what did that process look like for you? Like how long did it take, and maybe some of the big steps?
Yeah, no, not a problem. So basically, like I mentioned earlier, we decided to come to Nebraska because the Nebraska Financial Innovation Act, which was huge because not only does it allow this to happen, but it also had the Nebraska Department of Banking and Finance on board. They developed an entirely new department under them to deal with digital assets, which is huge for anybody. Which has basically made them kind of a focal point within the United States for other states to kind of see what they're doing and see kind of what they can do within their own infrastructure. It was also a big help in regards to what's happened in DC this last year with the Genius Act and pushing that forward. A lot of input, not just from the state, but from ourselves in terms of what we're doing and how that affects the federal level and understanding what the federal level wants to do and what they're trying to do. And it affects us. So 2021, that passed, and the department started gearing up their side of the equation. And that's kind of when I was brought in. I was president of a bank here in Nebraska for many years, but I was one of the supporters of bringing digital assets in. I was like a lot of bankers. And I want to stress this. The banking industry at first was very cautious, let's say, in regards to us even establishing, let alone operating, because it was new. Crypto had only been around for about 15 years at that point, roughly. And, at that point, people weren't quite sure about it. They weren't quite sure if it was just a flash in the pan, if it was anything worthwhile. What do we do with it? How does it operate? How does it work? And I very early on my end, through our banking trade associations in the state of Nebraska, once I understood the blockchain and kind of what that meant, the transparency, the safety and everything, I was like, wow, this is going to change banking. and it's going to come whether anybody likes it or not. So the fact that I was one of the proponents of it set me in position to where they're like, hey, would you be interested in running the bank here? So I got on board in 2021. I immediately started working on our application and business plan for the bank because it's all fresh. We couldn't go and utilize other things. What did other banks do? Because no other banks had done this. So it was a lot of working and integrating with the Nebraska Department of Banking and Finance, not just to understand what they want from us, but for them to understand what we are trying to do, so they can kind of set up their team to work not just with us, but any bank who is trying to do this. Because again, this is the first time anything like this has ever happened. So it was a long process, probably longer than normal. But when it comes down to it, they treated us like a normal fiat currency operating bank, which is huge because that's what we want. We want to be treated like a normal bank, only dealing with digital assets. So, most banks, you're in the financial world, you understand there's only been a handful of de novo banks that have been established since the '08 financial crisis, right? Not a whole lot. It's tough to do a bank. So you can imagine how tough it is just to do that and then take it into the digital asset realm. So it took us a few years. So we started in 2021, or 2022, really hitting the ground running, and just working and, business plan, application. I remember dropping off or submitting the final everything, and it was well over 1,100 pages. When it was all said and done, because basically going through everything from scratch, taking my knowledge from the banking industry, understanding how normal banks would do this, augmenting it into our situation. So it took a while, but again, we were one of the first ones. So finally, last year, beginning of last year, we got conditional approval after all those years in early February 2025. We got conditional approval. We had a handful of things to kind of finalize, cap raise, some compliance things and whatnot. And once we got all that said and done, we got the charter middle of November of 2025 after all those years, working on it. So it took time, but we set the groundwork, at least on the department side, for them to kind of understand what other institutions are probably going to be doing to get this up and running. So it was a long process, but I imagine down the road for institutions, whether it's a banking institution or a non-banking entity, there is groundwork laid to kind of how to get this charter done.
I want to talk about, and I appreciate you sharing that story, and it must have been super fulfilling when you finally got this across the finish line. And I'm sure you're excited to see what you're going to be able to do with this going forward. But I think one thing that I'm really trying to understand is like why we're seeing such a big push on this. We keep seeing so many headlines lately with different fintechs, firms applying for bank charters, seemingly higher numbers than previously. The Genius Act is, I'm sure, the main driver of this. But is there any other reasons? Like, I think we're seeing a little bit of a deregulation push as well. Do you think that there's just a bigger appetite from the government right now to allow these charters to go forward?
Yeah, no, I think you hit the nail on the head. The current administration came in, they immediately became very, very pro crypto, which we had not seen ever in the United States, opening the door not just within the White House, but also with all the federal agencies related to finance and banking. Congress really kind of just took the ball and ran with it, which I think really opened a lot of bankers' eyes in the United States in regards to this is actually happening now. We're actually, going to be dealing with this in the industry. Just dealing with my peers across the banking industry over the last year, the shift has changed from, okay, we'll see what happens to, okay, this is here. We got to deal with this. And the fact that, that act passed last year, which was huge. I mean, again, first time through, it passed through. That's amazing in DC, regardless of your industry, let alone the banking industry. So I think that was kind of the switch that really pushed the banking industry to kind of get on board and try to understand it. Try to figure out not only how it's going to affect the system, because that's a big deal. What's it going to do for liquidity in these banks? If stable coins come in, what does that do for their bottom lines? But also in regards to other companies, crypto companies, looking at getting into the U.S. financial industry. Because when it comes down to it, it's not just, can you operate, but are you doing it in a safe and sound manner that meets regulatory requirements? Because at the end of the day, it's the safety of the consumer that matters. And with crypto early on, there was a lot of companies that came and went because they did not do everything properly. And doing it through the United States banking system, through their regulatory process, gives you the peace of mind as a consumer that this is something I can actually get into. Now, it's one thing to go buy Bitcoin or Ethereum or something like that and try to figure out how to utilize it, what to do with it, how to put on your spreadsheets and everything. But it's another thing to have a stable coin out there that you can actually, backed by the dollar 1-to-1 that you could utilize down the road or even now, it's huge. And if you do it through a bank, a regulated bank, like we're a state regulated bank, that's a peace of mind the consumers never had before. So I think a lot of companies are getting into it. not just banks, but also companies, because there's two ways you can go about it in the state of Nebraska. You can either be a bank, which you basically have to set up a new department to do something like this, or you're a company like ourselves who partners up with banks and applies and goes through the process. So, I mean, it's the act last year that Congress passed through was the main catalyst, I think, to see why all these companies are very interested in getting into this right now.
This is obviously a new thing, as you just illustrated with your comments there. With it being new, I think it's worth asking, like, what could go right with this and what could go wrong with this. What do you think we're going to be learning early on in this process of having more, digital bank charters out there?
So yeah, no, that's a great question because there will be bumps in the road. I'll just start with kind of some of the negatives. There will be bumps in the road, not just on the banking side, but also on the regulatory side, because they're still trying to figure out a lot of kind of how to utilize this and how to properly utilize it for the consumers. I think if you rush into it too quickly as a company or a bank, it's going to be pretty hard. So I would highly recommend doing your homework, making sure you have the clientele for it, and once you do get into it, do you have the capacity to accept all these new accounts or taking your current customers and allowing them to utilize stablecoins? It's a big jump. And I think, merging that fintech world of traditional banking and crypto, specifically stablecoins, is, it's going to take some time, especially for some of the banks that have been around longer and aren't necessarily as progressive as some companies are. So it's going to take time, and a lot of it just comes down to education. The hurdles are going to be on the educational side. I recommend anybody who's even looking into this, whether you're a company or a bank, to really understand the educational aspect of it. Understand not just how this works, how it's going to work within your organization, but also the regulatory requirements, the risk, the compliance. It really does everything. Like I said at the beginning of this interview, they're treating us like a bank, in a lot of ways. And you got to have that mindset. You can't just come in with the idea that, like, hey, we got this great product. We got this great way to get, our product to the people, but does it meet the standards of the US financial industry? And you have to really understand that. But with that said, once all that's understood, opportunities are kind of endless, if you ask me. Because it's being regulated, I do not see this having issues with hurting the US financial industry, specifically banking. Whether you're a big bank or a small community bank, you have the opportunity to really take advantage of something like this. Some of the big banks, yes, they have the capital, they have the people, they can, easily do this on their own, some of them. But you get into some mid-sized banks, you're looking at like capital requirements in Nebraska. It's more than just doing a regular bank acquisition. Like you've got to have a lot of capital to get this thing up and running because of the risk involved. This is the first time anybody's ever done this. But once you've figured that out, whether you're going to work with a company like ours, which banks can do, will be able to do, partner up with us, allow our systems, allow our stablecoin into their bank, or they want to do it on their own, the customers are going to benefit by far because first off, it's backed one to one by our stablecoin, backed one to one by the US dollar. It's crypto, so it's transparent, it's fast, and compared to sending money, wiring, Western Union, it costs a fraction to move all those funds around. So the benefit is there, not just for the banks, but more importantly, the consumer. And I'll keep saying this because my background's in banking, in a safe and sound manner.
A big focus of our site is lending, and I know that you said that your future plans are going to be involved in exploring what might be possible on that front. What do you see as the biggest impacts on consumer lending? Do you see this as like being a big cost savings, or what's the opportunity look like, and like how does it differ from like traditional bank lending?
So the way I'm kind of looking at it right now is that you will be able to utilize the blockchain, your tokens, stable coins, to get loans, to utilize those for loans, versus doing a traditional loan through a bank and then trying to transfer everything over and figure everything out. Being able to do it within a digital asset depository institution will, I think, in the long run, be kind of the future of a lot of lending moving forward. Again, we're still trying to figure a lot of the intricacies out. I don't think anybody's really there on the lending side. And when it comes to the regulations and compliance aspect of it, we're still waiting on a lot of, the guidance for that right now. Once we get that, whether it's from DC or, say, Nebraska, that will help us move forward on kind of how we want to attack lending and how we'll move forward with it. Because we can't, again, we're regulated by the Nebraska Department of Banking and Finance. We hope to be regulated by a federal agency at some point down the road. If we're not doing it within their checks and balances, we won't be able to do anything. So really understanding the back end, the compliance, the regulatory, the risk aspect of this stuff is really going to help determine how we're going to go about lending moving forward within our company.
It sounds like the underpinning is really just using the stable coins as the collateral.
Mhm.
That does seem like something that could be really interesting because I think there are a lot of people who don't really traditionally participate with banks, and there's studies out there about how many unbanked people there are or underbanked, and
Mhm.
I have to think a decent number of those people actually have considerable crypto assets at this point.
Yeah, I would say too. And they would be able to, people have been in for 2, 5, 10, 15 years. They have Bitcoin that's just been sitting there forever. It's worth so much, but, they can't put on their portfolio. Like the bank can't do anything with it. So really kind of getting those parameters around that will allow this lending to happen. But with that said, it's within the US financial industry. It's still got to hit those parameters, like not just anybody can get in. You could have a ton of crypto ready to utilize, but if your credit score is not great, if you don't have a history in certain area, if you don't have the, outside collateral, that's gonna still probably affect how banks treat you in regards to lending. And that's just coming from a traditional banker standpoint.
Yeah, yeah.
But
Yeah, I
we got
think
to
you're
figure
onto
that out.
something.
And that's, like we're in the process of working through that. We need to figure that out, which is why it's so important for Congress to kind of really get on the Clarity Act and let these, like the Federal Reserve and the OCC, FDIC really kind of understand what they're comfortable with so we can kind of move forward with a lot of these things.
Yeah, it'll be interesting to watch. Patrick, I think that's about all I had for you as far as specific questions. Is there anything you want to end with as far as just anything we didn't cover or anything that you think you just want to kind of hit again?
All I would really say is that, to anybody out there in the industry, whether you're in banking, if you're in fintech or some other financial area, really do your homework when it comes to the future of crypto, specifically stablecoins with the United States. There's a reason why that bill was specifically for stablecoins. It's going to be a very, very important future within the US banking industry and most likely world at some point. Some countries are farther ahead of us than we are, but the US is number one country in the world when it comes to finance. They're going to follow our lead. So if you're in a bank and you or in fintech area, really do your homework on this, and because it's going to be a part of your portfolio at some point down the road, whether you, no matter how big or small you are, crypto is going to be a part of your business plan. So I would start now so you don't get left behind.
Great. Well, Patrick, thanks for joining us today. I really appreciate all of your insights on the subject.
My pleasure. Thank you so much.